Yo, my people, how you doing? It's another good day, and as usual, it's the journey to being funded, and you're locked up with Kev, man. So today we're reviewing the trade that I took on London session on the 3rd of January 2024, and this trade, it played out, but it started to be misbehaving around after some few hours, so I decided to take it down, okay? And I'll walk you through it step by step on what I saw and how I was managing it and what made me enter that trade, okay? So the trade, it played out. I closed my position at 1:1, and that was quite a confidence boost. And the main reason why I closed at 1:1 is because it started the whipsaw effect. I mean, it started the seek and destroy profile, okay? It started hitting the stops all over, hitting the stop up and down. So I decided I'll just close at 1:1 and I'll come back the next time, okay? Although the profit, I won't say about the profit, but I mean the target was quite long enough, but I managed to close early before the high that I was placing my stop got run over, okay? So without wasting no more time, let's get to the trading review, and you'll get to see how I was walking through the market in real time, okay? So welcome again. And so this is the chart, and you can see this risk to reward that I was using, okay? So I was anticipating for price to create high of the day during London, okay? And that's what I was anticipating. I wanted to see London session create high of the day. So what I did here is that I waited for London session to come into play, and once London session came into play, let's clear everything, let's clear the lipsticks, and then we will just walk step by step. We'll just we'll get back to everything. Let's delete all this, okay? Let's leave that one, okay? The chart is a little bit cleaner. So what I was doing here, I had this level as my drawn liquidity. This level down here, this was my drawn liquidity. You can see it here. So I was anticipating for price to come from this level up to this level down here, okay? So as I was watching price, I was watching price through all this business here. Once this price at 2 a.m. formed this bearish candle here, it formed a fair value gap here, but I didn't buy that, okay? I saw the fact that it didn't close below this low. I didn't believe that was a good, let's say, that was a good shift in market structure, okay? So I anticipated for another run here and to this fair value gap here. You can see this 15-minute fair value gap here. There's a 15-minute fair value gap here. So that's the main reason why I didn't take this short here, because I felt like these people will try to run this. I'll go up here and then drop it again, okay? Again, this, if you look well, this is a 3 drives pattern, okay? 3 drives pattern. They push it once, then they retrace, then push it again, then retraced, hit those people who got it right going upwards, then hit it again. So after I saw this 3 drive pattern, I was quite convinced that this was the high of the day, okay? Yes, or else high of the London session, because we all know that London session creates high of the day most of the time, okay? So once I saw that fair value gap being traded to, this 15-minute fair value gap. Once I saw price trading to it, I decided that I'll just wait for my confirmation candle, then enter. So I anticipated for this green candle, you can see this bullish candle here. I was anticipating for it to be violated, okay, so that I can see the order flow switching from bullishness to bearishness. And once that candle was violated, I started looking for sells, okay. And you can see this big red line here, that's a 4-hour fair value gap. So you can see we have a few confluences coming together. This is a 4-hour fair value gap, and this is a 15 minutes fair value gap, right? So that plus the fact that it's London session, those are 3 confluences, and we can anticipate this being a Judah swing. I guess it's the from 2 a.m. yeah, this one here was a Judah swing. So once I saw that, I took a shot here. So let's go. And my stop loss is, let's say, around 15 pips. That's the stop loss that I use mostly. Why is it doing this? Okay, just that short. Yeah, my stop loss is 15 pips, so I entered at 21.2643, and my stop loss was 15 pips above, and that would be 58, 1.2658, and that's it. Okay, that's where my stop loss was at, and I was aiming at the risk to reward of 1:2. Yeah, there you can see this, it overlaps with this one, okay, but I didn't get to capitalize to this area, so it got to, let's say, around 1:1.45. okay. So once I was in this area here, I noticed that price started to consolidate. I saw that price started to consolidate. It was consolidating, throwing wicks on this level. You can see here price throwing wicks and wicks and wicks, here coming, throwing wicks, then closing back to the equilibrium level at this consolidation. Okay, so once I saw that activity, and the first thing I did, I held this trade much longer. I wasn't at the computer, so I let it run. I thought that it will come to this level just fast as yesterday was, okay. And for your information, this is GBP USD that we are trading. And after I saw that this price wants to come back to my entry point, and it was around this point here, okay, it was around this point, it was at 1:1, so I decided to close the position, and damn, I was right. You can see price consolidated, then started to shoot upwards. It started to dig deeper into the 4-hour fair value gap, okay. So with that being said, this other pair of mine, gold, I didn't look at it, but you can see gold rallied well today, but I didn't even have a look at it, okay. But it's all right. These things happen, so we won't be mad about it. We'll just keep back testing gold and see what happens in the near future. In the near future, we might trade this too, but at the moment, let's go to the dashboard. I managed to increase my profits from minus, let's say, 1.5%, and I regained, let's say, 0.32%. We was in a drawdown of $72. Now we back at $59. So actually this trade went up to, let's say, like $50 in profit or $40 in profit, but I was aiming for my TP to get hit, okay. But that's a good lesson there. Someone on the comment section, Voice of Michael, just told me that, and actually I remember ICT saying low hanging fruits is the goal. Okay, the low hanging fruits is the goal, and that's the best thing that I've had in a while, because sometimes you tend to forget what ICT says. Okay, so you can see our equity is back at 49.40, $400. That's the profit that we're supposed to hit. We have a daily loss of $250, then a 59.52 drawdown. Okay, so this is just slightly above 1%, so we are still risking 0.5% until we recover this amount. Once we recover this amount, we will go back to risking 1%. Okay, you can see this is our graph here. We're still down, but yeah, we'll get out of this drawdown with discipline and with proper risk management. That's all. And actually, let's go to my affiliate dashboard. You should actually go to my Kiriyageta. What here? You should, where is that? I want to show you guys what my affiliate coupon. Yeah, just go use this Kev the Analyst coupon, and I'll be grateful, manze, for that. Okay, if you want to purchase a Propfirm account, just go. I'll just leave a referral link under this video, and you can just use this affiliate coupon too, so that we can be better together. Okay, so that's it for today. We managed to get a, let's say, a it was a $15 profit, and I used as 0.16 lot size. Okay, and that was with a 15 pips stop loss. That was actually, let's say, around 0.25% risk. Actually, I didn't risk 0.5%. actually, I risked half of it, and it was quite good. I was impressed with the level of risk management and the trade plan that I followed. I didn't get greedy. I didn't have the urge to open more positions, and that's the best thing, to cultivate discipline to this thing. You know, discipline is a hard thing, as my friend Mike says. Okay, so it's done for today, and I'll see you tomorrow on the 4th of January, and that tomorrow will be the last day of taking a trade this week, because we won't be trading during the NFP Friday. I'll just be trading, let's say, on Thursday, then we will close our trading week. So I'm hoping tomorrow we will be able to at least risk 0.5% and then get 1% in return. And if we do that, we'll be left with around $8. Yeah, around $8 in, you can see, $9. If we get 1% tomorrow, we'll have a $9 loss, and that we can recover next week. If we get a loss, we'll be at, let's say, 1.5% down. Okay, so that's it for today, my people, and thank you for watching this. So my guy, so that sums up our episode 8 of the journey to being funded, and still down, let's say, like 1% there, 1.2%, but if we follow good discipline into this, we'll get out of this drawdown, and then we will get back to the winning days. Okay, because I feel like this, if I'm getting to loss with just the same position, this is $70. If I do that, let's say 10 times, that's $700. That's about how many percent? That's about 8, 9, 10%, 10 to 12%, right? So if we can just replicate this over time, and maybe over this month, before this month ends, probably we might pass the first phase. Okay, then on February we can just deal with the second phase. right? So let's give the analysis. Make sure you subscribe, man. Make sure you subscribe. Over time you will grasp some knowledge. Okay, so it's give the analyst, and glad you're here. Thanks, and see you next time.